So I believe that we are coming to some type of breaking point here in the Vancouver real estate market where the dynamics of everything are going to have to change. Canadian bond yields are soaring again as of lately, sales are absolutely plummeting, and the Fed just gave a super hawkish speech the other day. And although the Fed is not the BOC, we do tend to follow whatever it is they plan to do as it affects the Canadian dollar. I'm That Agent Kelly. This channel is all things Canadian real estate, my local market of Abbotsford and the Fraser Valley. And if you're into that, just drop me a subscribe. So first things first, let's look at the Canadian 5-year bond yields. Just rocketing as of late. Just a few months ago, you could have gotten a 5-year fixed rate mortgage at 4.8%, possibly low 5s at a 3-year fixed. And now today we are probably in the mid 6s. Now, I'm not an economist, I'm just a Fraser Valley realtor, so feel free to correct me, but the reason why bond yields are likely soaring right now is because investors believe that inflation isn't going down as fast as we thought it would go down, and it's going to remain sticky around that 4%. So why would you buy bonds at a 4% yield when inflation is also 4%? You're not making any money. Therefore, investors are selling their bonds. This is pushing down the price of bond yields, which is actually increasing the percentage yield that you get, just like a dividend stock. When the price of the stock goes down, the dividend yield actually goes up. Similar idea. This is then translating over to higher fixed rate mortgages. Obviously, there's a lot more things in play than this, and I'm oversimplifying it, but that's kind of how it goes. Just investors don't see the value in buying bonds, therefore prices go down, yields go up. So now we're going to check out these sales because they're going down disastrously fast right now. So in the real estate board of Greater Vancouver, we've only had 1327 sales as of September 21st, and that puts us on pace for 1895 sales this month in the Real Estate Board of Greater Vancouver, which is only slightly better than September 2022, and last year the fall market was completely dead and in a complete all-out free fall when it comes to pricing. And basically what happened last year is sales continued to drop all the way from basically, June until January, where we then bottomed out at almost 1,000 sales. So 20,000 realtors in the Real Estate Board of Greater Vancouver, 1,000 sales. And I think we're going to see something similar happen this year where sales just continue to trail off until the end of the year and possibly February next year. Because I would say market sentiment right now is starting to get pretty bad. And I mean, fixed rates are literally like 1.5% higher than they were 4 months ago, 3 months ago. And now prices are like 10% higher than they were back when we had 1,000 sales per month. So interest rates are 1.5% higher and prices are like 10% higher. And at the bottom of the market in December 2022, we bottomed out at $1.112 million and then ran up until July and then peaked out at $1.21 million. And I personally think we're going to retrace most of those gains, if not all of those gains. So I'm gonna show you guys a piece of history now. Past performance doesn't indicate future results, but let's take a look at what happened in the States in 08. So in the US, after the 07 sell-off, we bottomed out in 09 at 209,000. We then nearly ran up 9% over the course of 2 years from Q1 2009 to Q1 2011 to 228,000. And that is a 9% gain, and then retrace some of those gains all the way back down to 221,000, which was a 5% retracement in price. So if we look at our current situation peak to trough, we are also up 9%-ish. And if we retrace 5%, that's going to bring us down from 1.21 to 1.51 million. However, something interesting is that our fixed rates today are basically similar or the same as what they were back in 2007. And I'm using fixed rates because pretty much everybody's going fixed right now. But the key difference here being that the median cost of a house in 2007 in the Greater Vancouver Real Estate Board was $511K, making your mortgage payment $2,500 a month, versus today, if you were to buy it after a 5% retracement, it would be $1.152 million and your mortgage payment would be $5,656 per month. And in 2007, the median household income in Canada was $66,000 versus today's $91,000, meaning your mortgage has gone up 2.26 times and your income has only gone up 30%. So definitely not a very good look on paper. And to make matters worse, which is definitely hurting market sentiment at the moment, is that the Fed, or Jerome Powell, basically just came out in their last meeting there and they basically said that they intend to keep rates this high through 2024 into 2025. And the way that I understand that personally is they're just essentially canning the idea of a soft landing, because I don't think there's any way that they're going to keep rates this high through to 2025 without something breaking. So my overall take is the longer they keep these rates higher, with each passing day, there is somebody else who is likely going to be forced to sell their home as their mortgage comes up for renewal. Maybe it's an investor who has a condo that went from making $200 a month to losing $1,500 a month. Or maybe it's somebody that just can't afford their principal residence anymore, and they're like, you know what, I'm gonna go live in Edmonton. I'm gonna cash out of BC and go live in Edmonton. Whatever the case may be, each passing day, there's more of these people coming up for renewal. So my overall take on this is short term, I'm bearish. I think prices are going to continue to come down at least until the end of the year. You know, we'll see what happens next spring, but at least until the end of the year, I think prices are gonna come down. And I think in the next year, the dynamic right now of super low inventory with home prices that nobody can afford, where we're just in this very stale, like low volume kind of market, I think will have to change. I think that dynamic will change in the next year. Either prices are going to come down or interest rates are going to come down and something's going to change. And it is my opinion that I think the Fed and the BOC will be forced to pivot via something breaking somewhere, whether it be real estate, banking, or something else. Something will break before the end of 2024, causing a pivot. Complete guess. This is not FUD. I'm not trying to be bullish, even though this is a very unbullish statement, to be honest with you. That's just my opinion on what I think is going to happen. So take it for what it is. And currently right now we have new construction declining every month over month, while we've maintained record high immigration levels. So I think we will come to a supply crunch at some point here, because the numbers just don't make sense for the amount of people that are moving here. And if we're cutting interest rates at the same time, I think we could be in for another dumpster fire market where prices are going up every week and everything is multiple offers and all that. So essentially what I'm saying is I'm short-term bearish. Long term, I don't see how real estate prices won't be substantially higher in 3 to 5 years. I think it would take nothing short of a catastrophe or a miracle, however you look at it, whatever your stance is, for prices to not be substantially higher when we have so few homes being built and so many people moving here. But till the end of the year, I'm bearish. So if you enjoyed this video, don't forget to subscribe, like the video. And if you like this video, you'll definitely like this video. I'm That Agent Kelly, and I'm making moves to move you. Peace.